Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here's another great one, Mike. Thanks for that answer. TJ says, does a spread insulate you from Vega risk?
It can, maybe not. A lot of times, theoretically, you have like the neutrality of, or Vega is something with which it's mitigated in such a way. And a lot of times, if I'm concerned with sinking implied volatility, then yeah, I think a spread is a good way to work that as somewhat of a hedge. But the point that I want to make, and although it's rare, there are times, or at least in my experience, it hasn't happened too often, there's times to where the option that I'm buying, the volatility could go down, and the option that I sold could go higher. Now, I imagine even in your, is that something that really happened to you very frequently throughout your trading career?
I'm sorry, Mike, I was typing something. Just repeat that.
Like to where, let's say you're in a spread, I was saying like typically volatility kind of moves in groups. To where, let's say you just bought a call spread and the volatility in the long option goes down and the volatility in the short option goes higher. That's something that has not really been a problem for me too much in my career. Is that something that you ever have? Do you have any war stories on anything like that?
The only time you really see that, other than a one-day phenomenon, is that if you're involved in a takeover, let's say that you made the terrible mistake of shorting like an at-the-money option, and you did a credit spread and you bought the out-of-the-money option, and then there was a cash deal the next day, sort of right below your long strike. You're going to get burned badly there because your long option is theoretically worth zero, even though it's supposed to be worth something because it's a cash deal. But Mike, that's just so rare. And we don't have to worry about takeovers in currencies, but that can happen, yeah. It's a great question.
Yeah, so yeah, it's one of the things to where for a spread, yeah, that does help neutralize volatility quite a bit.
Here's another one. David has a point. You know what opinions are like. Yeah, I think we know that, David. Thanks. He says he likes to manage risk. Well, if you like to manage risk, please go and see Mike Tosaw at brokersXpress. That's what he does. So Mike can help you if you're interested, because options give you the ability to tailor the risk to your own needs. So everybody has to decide on what those needs are, but options do give you a tremendous versatility. A couple questions about volume here at the ISE. The greatest volume it's really spotty, but I've seen Euro volume pick up. Obviously, we know why. British pound picking up over the last week, and a Canadian dollar trades pretty actively every day. What I would say is that you can always trade spread. So Mike showed that AUM, and there was very little trading out in December. That wouldn't stop me from trading if I was trading a vertical spread, because you know what? You can put the spread in as whether it's a credit or a debit at the limit that you think is fair, and you go from there. So that's the way I would trade any kind of product that you don't see an amazing amount of liquidity. If you're trading SPY, you might not have to worry about it, but obviously in a lot of other products you might need to worry about it. But the three that trade the most actively here at the ISE, probably the Euro, the Canadian dollar, CDD, Euro EUU, and occasionally Great British Pound GBP. We used to have the yen trading, and it hasn't traded as much. I guess, I know, Mike, you traded the yuck. Not much volatility, so I guess people have lost interest in it. I don't know. What do you think?
Well, with it, there's recent events. I was actually very much a yen bull for the longer term, but thankfully I've changed my opinion on that, so to speak. But with that, I lucked out on that, and that I changed my opinion on the yen before a lot of different things were happening. And like I said, it was totally luck on that. But with what's going on in this marketplace, just to kind of add to what you said, Steve, I want to tell everybody out there that I'm an independent rep, and I have the ability to trade whatever exchange currencies I want to. I have a Series 3 and a Series 7. I can do futures. I can do options. I can do whatever. this is my preferred option venue for trading currency options. So I want to emphasize that first off, and that I have no problem putting on a spread with anything. I have personal experience with real money in this exact product, and I just want to emphasize that even though volumes are low, this is a product with which you'll get in and you'll get out of it, and you'll be able to work your trade, so to speak, on it. And I speak of that with real money, so to speak, that I've done this with and will continue to do so with. In terms of why the yen's not trading so much, I think my main opinion on it is just that it's such a euro-based market right now. It's kind of like in the world of the tech boom back in 2000. If you told someone that you were long a bank stock that paid a 6% dividend, you were laughed out of the party. That's
exactly right. Like, I was at a trading desk, and I was trading pharmaceutical stocks then, and they just said, Steve, how could you do that? You know, Vega's just moving around like crazy in these stocks, and that's exactly why I didn't want to trade them. But again, you know, even if Vega is moving around and volatility is moving around, how can you mitigate that? Well, and Mike actually touched on this. You can trade spread. So if you're concerned, just a month or so ago, that volatility went from, let's say, 10% in the euro to about 19 or 20, which is an astronomical move in a month or so. And you said to yourself, wow, I think the volatility's moved up an awful lot. I don't want to trade euro because volatility is up so much. You're making a mistake. What you could do, if you still have a view, is trade spreads. Because you know what? If you go to your broker, they're going to have a calculator that allows you to understand what the Vega one option is versus another, and you'll be able to mitigate not all of the Vega risk, but a lot of it. Wouldn't you say, Mike?
Yeah, I think so. No matter what you do, oftentimes, like, people say, okay, like, let's say I'm buying a stock and I buy a put option. That should take away all my risk. It's not. You're never going to get rid of all your risk. It's kind of like when you buy insurance on your house, and let's say your house burns down. You're not going to be at break even. You're just going to be a lot better off than had you bought no insurance. And whenever you're doing a spread, if you're looking to mitigate Vega risk or whatever the case may be, you're just going to be better off than had you not done it, so to speak.
That's a great point. That's a really great point, Mike. Yes, much better off than if you had done nothing. I love that. I'm going to use that, Mike, if you don't mind.
That's okay. I've stolen much of your material through the years, so feel free.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.